All right, there we go. Everything looking good. Should be live, coming through loud and clear. Let me know in the comments if you don't mind. But looks good on my end. Welcome back to the channel, Crypto Trend Trader, with our Sunday evening market look ahead. It is 8 p.m. Eastern Standard Time on May 1st, 2022. Before we get started, I'd like to remind you this is not financial advice. I'm not your financial advisor. These markets are extremely volatile, so please do your own research and trade responsibly. So we've got a big week in the markets coming up. Obviously, we have discussed it many times, but you know, the way the close looked on traditional markets, very bearish close for our Friday. And typically when we close at the lows for a week, we see continuation into the following week. So weakness on a Friday close is typically followed up by more weakness on Monday. And then for Tuesday, we could pay attention for a potential like turnaround Tuesday. Appreciate that honkiness. Good to see you, brother. So that's what I'm looking out for this week. But let's go ahead and jump right in. We'll talk a little bit about some key levels and what's going on here. And then we're going to discuss the monthly closes as well, as we talked about that on last week's stream on Friday. And I think that's a really important thing, the key levels that we closed at. All the targets basically that we were looking out for got hit almost to the T, and we basically played out the exact scenario we were discussing. So now I want to discuss what further implications we can expect or we should be looking out for, and then the key levels that would obviously confirm, validate, or conflict or invalidate our thesis. So here is the TNX. We see it basically closed at 2.888. So we'll just switch right over to the monthly and take a look at this. And we had said the key level we were watching was like that 2.71 level on the monthly. So at this point in time, we're above the 200 exponential. We're above the 200 simple. The 200 simple has a flat slope on it. 200 exponential is already sloped positively. The stochastics and the knife are all in the bullish control zone, still angled to the upside. And then TJD, TDMACD is all green histograms, well above the zero line, well above the slope line, and the slope line is blue. So at this point in time, the only thing we're missing to basically confirm this, the most bullish that this can be on our monthly, is if we just turn off the actual price action, we just need to see the other line, the pink line right here, turn blue. And it's literally flat. I mean, you can see my cursor right there. The slope on that is basically zero right now. So the second it turns positive, it'll flip it over blue. So I do expect this month to be the month that we confirm our final step into the blue, our final step bullish, and a monthly bullish chart on the TNX. So obviously this corresponds with that key resistance we've been watching. Depending on what scale you're in, etc. If we turn off log scale here and we just take a look at our drawing tools, we will notice, and now I'm going to turn off the indicator just to make it a little clearer. You'll notice that we have this green resistance and support channel. And every time we have come to that resistance channel, we have gotten a hard rejection. And it's happened many times, from going back to 1986. And every time we hit the bottom of the channel, we bounced it pretty clearly as well. So it's acted as support and resistance many times. And now here we are zoomed in. I'm going to turn off the drawing tools for just a sec. And we can see last month's candle is a clear breakout. The month prior to that, we closed exactly at the resistance, respecting it. And then this month, we disrespected it. We completely broke out. And now the only step remaining at this point in time, that we're basically waiting for is the breakout above that previous high. So we've already broke through the key resistance. And then the next thing that happens in a downtrend, when you're consistently putting in lower highs and lower lows, you then threaten the previous lower high. And then once you take out that previous lower high, you're no longer putting in lower lows and lower highs. So then what you look for is eventually a pullback down after you take that out, and then a higher low. So that's what we're paying attention to now. For all the signs that we see, all the things that take place when the trend flips from bearish to bullish. So obviously in a case like this, where we have basically a 40-year bear trend, a breakout would be substantial and could take us to much higher prices. So this is going to put extreme pressure on the bond market, and then obviously change, a lot of things in the rest of the markets as well. But we know there's obviously inverse correlation between bond yields or treasury yields and the price of the actual bond. So that being said, this is extremely, extremely bullish. And that monthly flip was huge. Obviously, the weekly had already flipped bullish, just flipped the 200 simple bullish, and then everything else is extremely bullish as well. So at this point in time, trying to call, I understand how we're hitting a key resistance level, and people are inclined, or they want to say, okay, we hit a key resistance, so that's the top. We're going to get rejected here. That's a fair assessment on a 40-year trend, that we would continue to get rejected at the place we've been getting rejected. But at this point in time, we have broken out of that channel, of that trend, of those 200 moving averages. So now we need to legitimately consider what's the next area of invalidation that tells us that this is in fact a breakout, which is what it looks like is happening right now. And we know what that is. That's basically just threatening this previous high. So that, in my opinion, is the key level, the most important level for us to continue watching, and has been playing out. This has been playing out like clockwork. Obviously it was easy to call the low here when we got to 0 and then put in, essentially a higher low. And then obviously we saw a bunch of divergence taking place. So there was plenty telling us that the bottom was in. But now there's nothing really telling us the top is in. The only thing people are going off saying that the top is in at this point in time is that we're hitting resistance and that the Fed can't go any higher because they're going to choke out the markets and all this stuff. Well, I think what people don't understand is their goal now is to choke out the markets, the housing market, the stock market, kill inflation. They need to, obviously. I'm not going to get all political and everything, but let's be real here. I'm sure there's a ton of pressure right now to, kill this inflation. So that being said, if we flip over to TLT, we will see TLT basically closed at the lows right here. Again, the daily looks pretty horrendous. You don't want to sit here and try to call a bottom. When we look at the monthly, though, the monthly did drop all the way down to the 200 exponential moving average. This chart doesn't go back nearly as far, but we can see a parabolic uptrend taking place. And at this point in time, we broke down from the key sort of like ascending arc support that we have here in green. And we're basically at the bottom of our channel support right here at 200 exponential and 200 simple. So at this point in time, as far as I'm concerned, we hit our target. We did it. We nailed it. We've been expecting, predicting, discussing, this target the entire time since our peak. So at this point in time, the bond market has lost 35% of its value. So we have nailed this, absolutely nailed it. I don't want to get greedy here and try to call out the bottom and say this has to be the bottom. I do expect a bounce at this level, the same way I would expect resistance on the Treasury yield. But the fact that we've broken down from key levels and had such an aggressive move, and that we closed at the monthly low with this big, thick red candle, like arguably one of the biggest ones we've seen, I'm not sure that all of a sudden this just stops and then we just bounce from here. If anything, I would think we probably see continuation. And then if it's going to reverse, we see aggressive buying coming in, buying it back up, and we leave behind a rejection wick. And when I say a rejection wick, I mean a rejection of lower prices, a rejection of further downside, in the sense that this candle opens up, we try to push down lower, it gets rejected, and then we push all the way back up and potentially close higher. So we basically have, a nice little green body with a big wick at the bottom. That would tell me, okay, we probably have bottomed right here. Whether it's temporarily or, completely bottomed, we don't know that yet. But right now, we don't see any signs of bottoming. Now arguably, a good strategy, and one that I obviously use myself, is to buy the 200 exponential and simple moving averages. That's a great strategy. It works great right up until it doesn't. And then you go into a bear market and then you sell the 200 exponential moving averages, 200 exponential and simple. And that works great. But at the same time, like I said, this doesn't have to just reverse right here and it's done. We could easily see another, 10% wick to the downside get bought up, or 6% or 7%. So in my opinion, this is still pointing to the downside aggressively. And I'm not trying to just jump right in here. I think on the macro, a 40-year breakout of the bond bull market or the yield bear market doesn't seem that unlikely to me. It really doesn't. So I'm not ready to just write this off either. But I could understand how people would have a legitimate argument to buy the 200 exponential and simple, especially on the monthly. So U.S. oil is next. Obviously, just kind of closed neutral here. It's above the 8 and 21 on the daily, which is good. It at least reclaim kind of the support level, but it still looks like a descending triangle. It's still a series of basically the same lows and lower highs. Now it's starting to do some funky stuff here at the end. Let's go ahead and just switch over to the monthly and we'll take a look at that. And as we switch over to the monthly, we see pretty aggressive close, way above the 200 exponential and simple. Both have a positive slope to the upside. So we've reclaimed the bull trend on oil. It looks strong. We did get a hard sell signal, left the bullish control zone, and we had this big rejection candle. And obviously, whenever we see a candle, especially on a monthly, that has less than 50% of the entire range is the body, or over 50% of the entire range is the wick, and it's on one side, that's a rejection of higher prices. So in my opinion, we rejected higher prices. A lot of times we'll float back up so some of the market makers can close positions, and then we'll see the actual rejection play out. It doesn't have to be just a hard rejection and then we never go, back up here again. We immediately go lower. That's what you see a lot of times, and we did have a higher close this past month than the previous month, but I'm not ready to say that this isn't at least a temporary top. There's quite a bit of resistance here. It goes back a long period of time. So I wouldn't be surprised to see oil come back here and cool off, potentially even see a pullback into, somewhere between the mid 80s and as low as the mid 60s, but probably somewhere around like 75 is our target to the downside. So that being said, going to keep watching oil. It does look like it's putting in at least some form of potential consolidation top, at least for now. So next we have Dow Jones. The Dow Jones obviously closing near the lows. It did not take out the cycle lows, but it closed at the daily low. It closed a very, very bearish candle and made it clear that this is still continuing downtrend right here. So at this point in time, the only thing left to confirm 100% to the market that we're still in a downtrend is taking out the low right here. So we're a couple bucks off of it, $300 off the lows right now. At this point in time, it's very clear we have a high, a low, a lower high, a lower low, and then we have a lower high right over here. And then now we're getting ready to put in a lower low. And we have clear targets to the downside. We discuss them regularly. We obviously saw a very bearish weekly close. Here's our monthly close, a new monthly low on the Dow Jones, closing at essentially the 21. So again, very, very bearish. Hard sell signal, left the bullish control zone, all red histograms, red slope line. Everything is pointing to the downside. Now, typically, we will bounce the 21, but we already came down to 21 and bounced it once. We came down to 21 and bounced it a second time, and now here we close at the 21. So I think that there's two key scenarios that play out here. We try to push back up and get above the 8 and get rejected, and then we go lower, or we try to push below the 21, we get rejected, and then we go back to the 8. So either one of them is viable at this point in time. When we look at the metrics, though, it doesn't necessarily look like this market is just too tired and there's just no room to go down anymore. So in my opinion, I think it's likely that we do see continuation this month after that confirmation. But we have flipped over the 200 exponential and simple on the daily, both bearish again. So we're very much in a bear trend, very much in a bear market on the main indexes. So the SPY is next. Again, we closed just off the lows. I mean, literally a hair. But once again, if we look at this, we have a high, a low, a lower high, a lower low, and then a lower high, and then we have a higher low, and then we have a higher high. But realistically, what are we really looking at right here? Well, we're really looking at one big move to the downside, one big move to the upside, and then a second big move to the downside. So this all looks like it's part of that same one move, the same way this is part of one. So here we have a high, here we have our low, here we have a lower high, and then now it looks like we're getting ready to put in a lower low. So a lot of times people will get confused, caught up, or tricked by like the internal moves, but this is just the market like breathing in, breathing out, breathing in, breathing out, breathing in, but it's still going in that same direction. You don't want to get psyched out by these swing moves. So this is a swing high, this is a swing low, this is a swing high, and then this move is still in the process and literally $1 away from a new swing low. And again, we see bearish control zone, a clear rejection, and push down to a lower low. We're not seeing any divergence showing up or anything like that. We're seeing all red histograms. These markets look very, very, very weak. If you have not been protecting yourself, your account, your principal, I'm sure you are feeling the damn pain right now. And the only thing you can do right now to unfeel that pain is educate yourself so that you can not make the same mistakes again, or that you can recoup, some of your losses, or, get back some of the gains that you just gave away, etc. But we see the S&P on the monthly closing down here at the 21. Exact same potential situation here. We get pushed down lower, we reject lower prices, go back higher, or we get pushed back up, reject higher prices and go lower. But we have a new monthly candle closing at the lows. And like I always say, when we run out of time and we close at the lows like this, whether it's the daily, whether it's the weekly, whether it's the monthly, that's all we did. We ran out of time. We didn't run out of sellers. People didn't stop selling. The month ended. The same way with like a daily or a weekly, like when we're talking about closing at the lows on like the weekly chart. We didn't run out of time. We literally just, or I'm sorry, we didn't run out of sellers. We literally just ran out of time. So that tells me we're likely to see continuation in the direction of that trend, which in this case is down. So we see a bunch of red histograms. We see a hard sell. We left the bullish control zone. The S&P looks very, very bearish right now. We've only seen, I mean, in the last, let's look at this chart here. You know, this was obviously our breakdown in February of 2010 on the monthly. So on the monthly, we can literally count pretty easily how many candles we had at the 21 or touching the 21. And it's not very many. And again, this is going back 12 years. So if we look at that, we can tell we're at a key pivotal point in the market. I mean, here we had like 3 or 4. Here we had like 3 or 4. And then, you know, one more here where we at least touch down to it. You know, here's a handful of them. A couple right here. A couple right here. But if you look at how many actually closed at or below the 21, I mean, it's less than 10. Let's say it's 12 in 12 years. So it happens once per year. And it's either a great buying opportunity or we're right about to lose a key area and go into, you know, what amounts to, you know, a global recession, crash, whatever. So arguably, you know, maybe this is a great entry point if all of a sudden the markets turn around, or it's the beginning of confirmation of much further downside potential. So, and you guys know, you know, I'm biased. I'm leaning with the trend here. So the trend is we're under the 200 exponential and simple. They both have a slope to the downside, and we're putting in new lows. So to me, that is extremely bearish. I have no interest in entering markets trying to pick, you know, catch a falling knife when everything looks terrible. Looking for some kind of divergence. I'm looking for key levels. I'm looking for something that tells me we're about to go into a macro reversal, not just, oh, we're hitting a support, so maybe we're going to bounce here. You know, that's great for a quick little scout, but next we have the IXIC, NASDAQ composite. So again, we see clear rejection under the 200 exponential and simple. We get rejected, and now we're putting in new lows. There's no question in anyone's mind. This is a downtrend. We have now taken out price action all the way back to November of 2020. So, you know, we have basically erased quite a bit of time and gains and market value. Looks very bearish on the daily, and then obviously switching to the monthly. I mean, the monthly looks absolutely atrocious. Not only did we close below the 21, we closed substantially below the 21 and with a big, thick red candle. So this looks absolutely horrendous. Literally same exact thing. We didn't run out of sellers. We ran out of time. If we ran out of sellers, we would see a wick, and then the bulls would come in and buy it up, and then we would see some kind of rejection, and we would close off the lows. That's not what happened. We literally closed at the lows to the penny, which means there were still people selling right up until a moment that the month ended. So that tells us that when the new month starts, the likelihood is that more people will continue to sell because we didn't see seller exhaustion take place. Now, is it possible seller exhaustion will take place and we'll just go back up magically? Sure, anything's possible. But we didn't see any signs of that taking place. And that's what we're looking for. We're looking for breadcrumbs, clues from the market makers, from the whales, as to what's about to take place. And we're not seeing any clues that this is going to reverse to the upside all of a sudden. Again, on the monthly, we have new low close. On the monthly, we have a hard sell. We left the bullish control zone. We have, at this point in time, 6 months of bearish red histograms on the TDMACD, and we have closed below the 21. So this looks very bad. It looks like we're basically coming down to test that next level, which is 10,850 on the NASDAQ. Again, very, very bearish. And the Russell obviously looks a lot like the NASDAQ. New low on the close. Looks horrible inside the bearish control zone. Absolutely no one stepping in to buy right here. The monthly, again, same thing, below the 21. Completely new low for the cycle. Absolutely horrendous. Literally from our 2018 highs back here, you know, we're a couple percentage off that. So not even the Rona highs right here. This was right before Rona. We'll see that the Russell was already extremely weak. I mean, this thing has been total trash, garbage, shit for years. I mean, it literally didn't even put in a new high. So in 2020, compared to 2018, we didn't even take out the new high right here. So we had already put in a lower high. And then it completely shit the bed. And on the monthly, retested 200 exponential and simple. I mean, this is total garbage. This obviously, what this is telling us, what this chart is saying is, hey, this is a complete zombie index full of zombie garbage that you do not want to own, because the moment interest rates go higher, all these corporations, all these companies are going to default because they're not even taking in enough income or enough profits to pay their loans off. The borrowed money they have, they can't even service the interest debt. So everything that people are saying is going to happen to governments around the world is actually in real life happening, but it's happening on the Russell. So that's what's taking place right now. This is a garbage index. It's full of total trash. I mean, there's a couple good things in there if you're lucky, but the majority of this index is total garbage. And this, in my opinion, speaks to the overall health of companies inside these markets and clearly highlights the importance of these interest rates and how we're going to see massive amounts of defaults and complete crashes in valuations in these companies the moment that servicing this debt, comes up. Because think about it like this. If you have basically a loan, from a friend or something, and let's say you borrowed $100 and you're paying them 1% interest, and then you're using that $100 to pay your credit card bill. Well, what happens if all of a sudden, your friend says, hey, it's been, a year I loaned you that money and you've been paying me off, but now the interest rates are going to go up. So now you're going to have to pay me 20% interest. And this is obviously an extreme example. But going from the 1% interest to the 20% interest, it was easy for that company to come up with that $1 in revenue to pay the loan back and then use the money from the loan on their books to just get by, hoping that eventually the business turns around and they start making money again. Or you extend them more credit and you borrow another $100 at 1%, and then now you owe $200 at 1%, etc. That's what these companies have been banking on and surviving on for years. So all of a sudden, not all at once, but we're going to see these corporations, when they go to raise more money, or, when their old loans come due and they try to get, extended loans or further loans or more loans or, whatever offering, stock offerings, etc., the valuations are going to be substantially different. And if the interest rates they're forced to pay are higher, they might not be able to service the loans, let alone to service their actual debt, which is why they're taking out these loans. Because most of these companies should be profitable. I mean, they're big, publicly traded actual companies that should be making money. So they shouldn't fail to service their interest debt. Obviously, something is wrong if you're, if you've ever had a friend or known someone that was literally just making minimum payments on credit cards, that's obviously not a good idea, and it's not sustainable, because every single month they're paying a portion of some massive amount of interest on that credit card. And typically what happens is, unless something crazy happens, you win the lottery or you get a new job or it was just a temporary scenario, you don't ever come back out of that, because once you're in that, it's a death spiral. You're basically a zombie consumer. So that being said, compare that to one of these corporations and these things start going bankrupt. And I mean, this index is going to get absolutely wrecked. Now, granted, they'll cycle out a lot of the losers and everything, but I mean, it's something crazy, like 50% of this index is like zombie corporations. So got to be real careful with this one. I think it's giving a huge signal to the markets of the overall health of not only the United States, but like the world economy. So that being said, Russell looks terrible. All red histograms. We've already lost the slope line. This thing's completely fallen out of bed. We have support here at 1744. But I mean, in all reality, I mean, this thing, I fully expect this to just completely crash. Next target to downside is the 382. We're already well on our way. 1,718. Complete and utter trash. Total garbage. So XLE, so energy had a very weak day, bearish engulfing candle, closed below the 8 and 21. We obviously had a bunch of bearish divergence we've been paying attention to. 3 drives right here. It looks weak, much stronger than most things, but definitely looking like it wants to cool off here. Now the monthly, we did close above the 200 exponential and simple again. Both are sloped to the upside, blue and nice and bullish. Inside the bullish control zone, all green histograms. Blue slope line. Everything still looks good on energy. We're at a key resistance. If we hang out here long enough, we probably break through it, and that tells us oil is probably going parabolic as well. Much stronger. But again, we don't want to be buying at these levels. This is when we're like taking profits on these levels. XTN transportation, very weak. Closed below 200 exponential and simple. Slope to downside. Everything looks very weak. The monthly close was exactly what we discussed. We pushed all the way back down and closed at the 21. So we wicked to the 21, 3 times right here, and then finally we closed at the 21. So the realistic thing that happens here is we try to push back up, get rejected, and then probably go much lower. Again, we have key supports much, much lower. I mean, basically around like $70. All red histograms, hard sell. Everything sloped to the downside. I mean, 4 months, this thing has looked like complete trash for. So transportation definitely looks very, very topped out. Next, we see financial. So obviously, a lot of people publicly, a lot of influencers, a lot of big talking heads, have been talking about how banks are going to do extremely well. I think we have, at this point in time, I mean, we buried the hatchet on this one. Obviously, they are all wrong. They're completely wrong. Anybody that was telling you banks were going to do well doesn't understand. They don't understand the system. They don't understand banking. They don't understand economics. They don't understand how banks make their money. So I would be very, very cautious of listening to anyone that's talking about how banks are going to do well. And now we have our proof. So everything has played out. We have clear proof that banks are trash, and you do not want to be owning banks. You do not want to be holding banks. You do not want to be buying the dip on banks. Anyone that says that, clearly misinformed, ignorant, moronic. I mean, there's lots of terms we can use for them. But this is an obvious trade to anyone that understands how the system works. So, I mean, I don't have to tell you guys that. I've been, blowing the horn on banks and how they're trash. We're obviously very clearly in a descending channel as well. I mean, it's clear as day. We're basically operating, depending how we look at this, arguably you could say that it should be drawn more like this, or, like wick to wick or something. It doesn't have to be perfect. The point is that we're in a descending channel. We're towards the bottom of the channel. It looks like trash. We just put in new lows. We're probably going much, much lower. We lost the key level. We're below the 200 exponential and simple. They have a negative slope. Banks are obviously garbage and trash, and you don't want to own banks because they can't make money right now. They're not going to make money right now. Who's going out and borrowing all of a sudden? You had multiple years to go out and borrow at literally record low rates for a house or a car or, a man cave, whatever it is you're going to spend your money on. You had years to do it. So who's going to borrow now? All of a sudden, now that the rates have, doubled, tripled, quadrupled, who's going to go out and borrow? No one's going out to refinance their house now that, loan rates are at 5.5% when they were just at 2.5% or 3%. No one. Everyone has already financed. We're at record lows. Everybody wants to refinance at record lows. So there you go. So how are banks going to make money off loans? They're not. Why would banks want to go out and push out more loans now? Well, because the interest is higher, so they make more money, right? No, because they just make the spread. So the only difference is when we were at 0% and they were lending at 2.5%, they were making the 2% spread and there was no risk. And now we're at 5.5% and they're making still the spread, which could be even more right now, but the risk is also much, much more as well. So we have to be real careful with this. In my opinion, financials not the place you want to be. Obviously, it's proven fact at this point in time, has played out very clearly. Massive, massive bearish monthly candle, hard sell signal, all red histograms, closed below 21. Looks like complete and utter trash. $30, still our target to the downside. No secret here. This was very clearly topping out and very clearly demonstrating that it was going to be going much lower. So I know none of my listeners are upside down in their bank stocks because they know better. XLV, healthcare. So obviously healthcare looked pretty toppy over here. It did take out that high and then it sold all the way back down to 200 exponential and simple. It has closed below it. It's a pretty weak close. Technically, this is our highest high now. So we don't actually have like a lower high. So at some point in time, we need to wait until this bottoms out and then bounces back up and then puts in like a confirmation lower high before we can legitimately say it has started like downtrending. As far as I'm concerned now, this is still technically in an uptrend, essentially like an ascending channel. So until we break down from key levels, take out some of these key horizontal supports or something to that effect, this doesn't look terrible. Arguably, we've been finding support at 200 exponential and simple. Each time we have bounced higher. Here we front ran it slightly and then went higher. Here we spent a bunch of time around it and then we went higher. So we don't really have a clue from the 200s here. Now, if we just immediately break down lower, come back up, get rejected, and then see continuation down, it's going to be clear we're in a downtrend on this. But if we just consolidate around the 200s and then we go higher again, it's just going to look like we're still in that uptrend. So XLV, healthcare, actually still looks decent. in comparison to most of these other things. It hasn't come down to 21 yet. It didn't put in a new lower low. It does have a hard sell and a mix of histograms. So, and we know that this is one of the safety plays that we always talk about. Next, we have utilities. Again, one of the safety plays. And I'm not necessarily saying that if you put money in this, nor would I recommend that you're not going to lose anything. The idea behind these is that if the situation turns into a recession or depression or something like that, that everything's going to go down. These are just going to go down less because people still need healthcare. People still need utilities. People still need real estate, places to live, consumer staples, etc. So that's the idea behind it. It does not mean they're not going to go down. It just means when everything else goes down 20%, you're going to go down 4% or 6%. So XLU coming back down to support, closing a very, very bearish daily candle. All red histograms, bearish control zone. Looks absolutely horrendous, but still much, much better than the other stuff we've looked at. So I do expect continuation down to that key support. Now we have levels everywhere from like 69 to like 71. So maybe we find support here. We did get denied exactly at the heart line of our macro channel though. So I think it looks more likely that we're going to come back down here, consolidate for a bit, and then we'll see. Still looks pretty bullish overall on the monthly chart. So really don't want to get overly bearish on this. And when I say pretty bullish, I mean in comparison to everything else. So XLP, consumer staples, very bearish candle. Back at that key support. So we tag that level we were paying attention to. We do see momentum picking up to the downside. Switching over to the monthly. We see a pretty clear rejection here. Again, over 50% of the candle travel is a wick. So that's a rejection of higher prices. We did just get almost an exact inverse candle the month before, which was a rejection of lower prices. So we have to be careful here. So we see obviously we're rejecting lower prices below 75, but we're rejecting higher prices above 77.60. So we're kind of in this little range for right now, and then we'll see kind of what happens here. Overall, still looks decent. We do see momentum has crossed. We got the hard sell, but we didn't leave the bullish control zone. We're pushing back up here. So what we're really paying attention to now is we have a high, we have a lower high. We want to see this come up here and either cross and then get rejected, or get rejected as the blue stochastic touches the pink stochastic and puts in a third drive, because that's going to give us, what amounts to 1, 2, 3 drives of bearish divergence. So that's what we're paying attention to. We obviously have the highest point right here. We have another high point kind of in this area here, and then we would potentially put in a third higher point over the next couple months. That would be 3 drives of bearish divergence on the stochastics. Not super reliable because we're not seeing that on the TJD, TDMACD, but that's the point. They shouldn't always line up. We want sometimes, one to be telling us something and the other to be telling us something else, so we can have either higher or lower levels of conviction. So XLRE real estate, again, a very, very bearish candle. The worst candle we have literally seen in months, probably years at this point in time. Yeah, I mean, this is the worst candle we've seen the entire bull run up from 2020, from the crash. This is by far the biggest and reddest candle. So that to me is a huge red flag, so to speak. We push all the way back down to the 200 exponential, violated 200 simple, flipped the 200 exponential red. We see what looks like clear rejection right here. And again, we see some clear bearish divergence taking place. This peak is obviously low. This peak is higher. And then we see in price action, this one is high, this one is lower. So we see clear bearish divergence taking place on the chart as well. Real estate not looking great right now, and obviously has some serious macro headwinds as well. We did close below the 8, still much healthier than most charts, has not put in a new low. We see some clear supports on the monthly around these levels, but the real target to downside is like $44. Hard sell signal left the bullish control zone, a bunch of red histograms in a row. Real estate looks very, very weak, and it basically has confirmed with this monthly close that it has topped, in my opinion. VWO, Vanguard FTSE Emerging Market ETF. So again, pretty bearish candle. We swept the lows. We put in a slightly higher low, but it looks like we're going to see continuation. We are getting a cross, but we're still inside the bearish control zone. We do have 2 green histograms. So it looks like it's trying to carve out what amounts to a double bottom at this point in time. Slightly above the monthly 200 exponential and simple. All red histograms for, 8-9 months so far. Red slope line, hard sell, left the bullish control zone. Just clearly just melting down, and now we have crossed the monthly 8 and 21 bearish. So again, this looks very bad. Looking back at this chart, this is going back to 2008. So do you want to be in the emerging market fund ETF? I mean, probably not. It's been pretty range bound, you know, basically for its existence, with the exception of one really low spike and one really, you know, well, slightly higher spike. But at this point in time, the way I look at this is we have a high, we have a low, and then everything else is inside. So basically, we have a massive range from all the way up at like 58.80 to down to like $20. But the majority of the time, we're just operating in this central portion of it. So until we actually break out of, you know, something in this pattern, I don't really see any reason that we want to be like involved in this, honestly. There's just nothing here saying like, oh, we really want to put our money here because, you know, this looks like it has potential. We really just don't see that at all. I think realistically, something like this, I mean, there's a lot of ways you could draw this and not a lot of clear ones. But at this point in time, you know, probably 80% of price action has taken place in the last 10 years in this range. And we're basically right smack in the middle of the range. So the highest likelihood is that we either go back up to the top of the range or down to the bottom of the range. In this case, it looks like we're headed down. So in all reality, it's basically a coin toss. Because if you go long here, you go short here, you're basically a coin toss, you know, the movement to the upside or to the downside. It looks like it's going to the downside though. So that's where I'd be paying attention to. If I was looking to load up on this, I would look for essentially what amounts to another higher low. So we have this low back here in 2009. Then we have a higher low in 2016. And then we see that accelerate. We take it out right here. So then we draw, you know, basically like a parabolic support line at that low to this one right here. And now we have two more lows. So we have these two lows and then a support. We broke down from that support. So now we use this low and this low to create a support. So then eventually what we're looking for is when this comes down here, eventually, if it comes down here, does it come all the way back down to that support? And then that is going to be the area that we would look to reload, is somewhere around here. So that's the key areas we're looking at. It's like $36. And again, looks very, very weak and looks like it wants to continue to the downside. So, and you know, I know people see a move that's 10, 12, 20% and they say, oh my gosh, that's the big one. I can't believe I missed it. I got to buy now. You know, you can have a quick little relief rally in one candle, 20% after something's been beaten down 60, 70, 90%. Does not mean the bottom's in. We want to look for actual indication of a bottom. Less important than catching the actual tip bottom. Because if you try to catch the bottom on 100 stocks, maybe you catch it on one. Probably not. But if you look for bottoming signals on 100 stocks, probably something like, you know, 50 of 70 signals you see are going to play out, or, you know, 80 of 100, something like that, are going to play out, you know, and then a couple are going to fail. So that's much, much more reliable. Like if you want to take 1 in 100 odds of picking the bottom versus taking, you know, 75% odds of, you know, picking the bottom based on actual pattern that's put in, not getting the actual exact bottom, but capturing 80% of the move instead, that's much more reliable and much, you know, much easier to do. So, you know, that's obviously my preferred method. So next we see DAX. So this one is holding strong for now, kind of consolidating in the middle of that range. Did lose the slope line here, did put in a much higher low right here. Still very bearish, and 200 exponential and simple, both angled to the downside. It has completely lost to 21. It looks like it's keeping the melt down. This is a pretty strong rejection of lower prices, but that was also a massive move too. So that might just, you know, somebody might have took advantage of that massive move, bought it back up, and then went ahead and took profits. And it could still just bleed out at this point in time. We see a bunch of red histograms, hard sell, left the bullish control zone. Again, all these charts look varying levels of the same. Some look really shitty but bad. Some look really shitty but better. But they all look really shitty. I mean, we've looked at a couple charts today that don't look absolutely horrendous right now. And even those ones don't look good. They just don't look nearly as bad. CN50, again, looks terrible. Basically retested the lows right here, trying to get back above the 821. We're not seeing a ton of, you know, signs as to what the direction is on the daily. When we flip out to the monthly, we're at some pretty key support. We're in the bearish control zone. We've had at this point in time, you know, 10 months of bearish histograms, red slope line below the zero line, 821 have crossed the downside. I mean, this thing looks like it's ready to keep accelerating to the downside. Just closed a new monthly low. I see absolutely no reason to be swooping here on these emerging markets, on China, on any of this, to try to scoop it up for some pop to the upside. No reason, in my opinion. UK 100 staying relatively strong. It did reclaim our yellow support line, but also had a pretty bearish daily candle there. Still angled pretty aggressively to the downside. Does look better than most right now. And as long as we hold this yellow slope line, it's going to look okay. But I don't love what it's doing here because it is running into a pretty hard stop here at like 75.21. Let's look at our weekly. Not getting a huge clue here on the weekly. We do see some clear weekly bearish divergence between our 2 points. This one is clearly higher than this one. This one is clearly higher than this one. So we have some very clear bearish divergence. Looks like it wants to play out, but there's still some people bullish on this one. So don't want to get caught on the wrong side of that trade for sure. And then we see the EWZ, Brazil, pretty aggressive sell-off right here. Broke down from key levels, closed below 200 exponential and simple, bearish control zone, all red histograms. We're really waiting for it to get down to our target here at like 30 bucks, at which point in time, I'm going to, I don't want to say aggressively load up, but I'm going to reload my position at that level. Obviously, we played out the scenario that we think is going to happen here, and we have what amounts to a 6.5 to 1 risk reward ratio on this trade. So seems like a good one to me. Obviously, we are holding this blue support, and then we have a yellow support. So we want to watch when we come to the yellow support. If that doesn't hold, obviously we want to get out of the position and then try to reload, at a lower support, either the red horizontal or the blue ascending support line. But that being said, again, still weak, still below the 200 exponential and simple, and clearly getting rejected on the monthly. So could this trade be over? Maybe, at least for now. We'll have to see. I mean, is the commodity trade a little overcrowded? I mean, maybe, honestly. So DXY is next. Obviously, DXY very strong. We did have a little weakness going into the close there, but nothing concerning. We see a sell buy. If we see a sell signal here, that is our bearish divergence signal on the Jewel Thief, and that has like a 92% probability of playing out. So we definitely want to look out for that. If we go to the monthly, we have this massive, massive green candle to the upside. I mean, this is the stuff that they write stories about. At this point in time, we had a high back in 2017 of 103.82, and then this high was 103.92. So not only did we take out the high from 2020 pre-COVID right here, but we also took out the high from 2016, I'm sorry. And then if we go back and look, the last time we were at levels, because obviously we took out this, so we were slightly above it. The last time we were at those levels was back here in 2002. So we have just broken out of a trend that has been taking place just from the high of 20 years. So we're 20 years, we're at the highest level the DXY has been in 20 years. So there's no reason not to be bullish on this at this point in time. We're above the 200 exponential and simple on the monthly. They're both blue, angled to the upside. We're above the zero line. We have all green histograms. We have blue slope line. We're in the bullish control zone. I mean, this thing is the most bullish it's literally been in 20 years. And looking at this chart, it's arguably the most bullish it's ever been, with the exception of this little stint right here. But because the chart doesn't go back further, we don't have a 200 exponential and simple moving average. But we can predict it would be somewhere around like right here. So when we broke out right around here and retested it, that would be the area, and we took out the previous highs right here, that would be the area that corresponds with what we're at right now. And after that, the dollar went absolutely parabolic. The DXY shot straight up and put in a new all-time high. So again, we took out these highs. We confirmed above 200 exponential and simple. So what would likely happen? We would probably, the next area to pay attention to on this chart is the previous highs from 2001. And we know that's like 121. So this thing looks like it's getting ready to go parabolic to the upside. And again, we see the most aggressive green candle that we have literally seen, since like back in here, back in 09, when this thing bottomed. So very, very bullish on the DXY. Again, not to reiterate my point too much, but anyone that doesn't understand why the DXY is so bullish right now, or understand what a chart looks like, or able to put aside their biases about printing money and look at this actual chart and see the DXY is strengthening and understand how that correlates to investments and the world economy. Anybody that doesn't understand that, you can still listen to them. I'm not saying don't listen to people if they're wrong about stuff all the time, consistently for years in a row. But I'm just saying, take it with a grain of salt if they don't understand basic principles like the DXY. because I hear a lot of frustration from people, and they're like, these markets are rigged. The DXY, the dollar is strengthening, and this is BS because the dollar's purchasing power is going to zero. And people that talk like that are just confused. They're just completely confused because they don't understand what's really taking place here and what this chart is telling them. And if they don't understand that, chances are whatever else they're talking to you about, they probably don't understand as well. They're probably just repeating what they heard from someone more educated than them. So that being said, Tesla closed below 200 exponential and simple, showing some weakness, still above the previous lows right here. Got to be real careful with this one, especially with Elon acting a fool. I mean, I'm not saying I agree or disagree with what he's doing. I think it's great that he's going to take over Twitter and, you know, try to make people able to say what they want or whatever. I don't really care. I don't use social media. I don't care about Twitter. I think it's a toxic cesspool of trash people and trash ideas. But that being said, you know, if I was investing in a company and the guy who owned that company said, hey, I'm going to leverage a bunch of my positions that I have a massive portion of this company, you know, in stock or stock options, I'm going to leverage those and borrow money to buy another company, I would be slightly concerned. I mean, and Elon's a busy man too, so who knows? Who knows what's going to happen? Maybe there'll be some massive short squeeze and Elon's positions will get liquidated and he'll lose control of Tesla. I don't know. I don't know what's going to happen. That's probably not going to happen, but maybe it does. You know, wouldn't that be poetic justice if you went from being, you know, a multi-hundred billionaire to getting liquidated? I mean, I don't think he's going to be poor or anything. He'll probably still have, you know, $1 billion or $2 billion under his belt, but you know, that's kind of a big deal. So, and you know, at this point in time, who's he really fighting? I mean, he's fighting the global elites. He's fighting like the government. He's fighting, you know, the 0.1%. I mean, I get what he's doing, but got to be real careful with these investments. So looking at the monthly on Tesla, much stronger than most charts here. We touched a 21 twice. We did close at the lows of these candles. So that was our lowest close basically in the last like 7 months here. So got to be real careful with this one. Looks a little tired, but nothing too crazy just yet. You know, the best thing this could do is just go sideways for a couple months, honestly. ARKK, new lows, absolutely horrendous, total trash. Daily chart looks like trash. Monthly chart, I mean, look at this monthly chart. Oh my God. What a nightmare. What a useless human being. Oh my gosh. Can you even imagine how many billions of dollars she's deleted from existence? We're back at 2018 levels. How pathetic. She will probably go down in the history books as the woman who literally lost the most money for the most people. I mean, her ETF is already record-breaking, record-setting. All of them are. I mean, most ETFs never could lose 50%. So she's crushing it. The worst chart maybe in existence at this point in time. Nvidia, again, new lows, very, very weak, closing at the lows. The monthly chart breaking down below the 21, new low on the monthly, looks terrible. Looks like we're coming down to like 137. All red histograms, hard sell signal, left the bullish control zone. You know, what does this say for the semiconductor space? Well, Nvidia was the strongest, and you guys know we like betting on the strong horses. So if Nvidia's chart's looking like this, you can only imagine what, you know, Intel and some of the other charts are looking like. But semiconductor space looking real toppy. Transportation space looking real toppy. Yields breaking out. Dollar, DXY breaking out. Energy prices spiking, looking kind of toppy. Got to be real careful. The last time we really saw this scenario, this setup, was 2008, 2000. I mean, like our big crashes. So Apple still strong, still okay. Very bearish close there on the monthly, or I'm sorry, daily rather. Bearish control zone, all red histograms at the 200 exponential and simple. This is so far, we went a little deeper right here, but we didn't close below and then flip the slope over red. We kind of just bounced it here. So this looks bad. We have a high now, we have a low, we have a lower high, so we want to pay attention to a lower low. So if we break down below 150, Apple is going to look worse. Again, this is probably one of the best charts we have, and this one doesn't look good. Looks very toppy. Hard sell signal, leaving the bullish control zone. 3 months of bearish histograms in a row, losing the 8 for the first time since back here in March of 2020. So we literally have remained above the 8 the entire time. This is our first close below the 8 since the big Rona crash. So doesn't mean we have to crash after this, but you know, we're seeing something we haven't seen this entire parabolic bull run. So it's worth paying attention to. Microsoft, again, very bearish close. Did not take out the lows right here on the daily. So that is good at least. And then the monthly closing at the 21. Again, we see that same signature over and over again on a lot of these things. Looking weak. Hard sell signal, leaving the bullish control zone. We have literally been in the bullish control zone on Microsoft since basically September of 2016. So we've been in the bullish control zone since September of 2016. And now we have left the bullish control zone on this most recent candle. So we're doing something we haven't done in almost 6 years on Microsoft's chart. So definitely worth a little bit of concern right there. And again, the last time we did that was back in some of these like pretty heavy pullbacks. So, and we're the furthest we've ever been from the 200 exponential and simple. Not saying we have to come back and retest the 200 exponential and simple, but historically speaking, on a long enough time frame, we always do. So could Microsoft go to $100? I mean, I'm not saying it will, but there's a possibility it goes to $115. Depending on how long it takes to get there, this is obviously going to keep creeping up. Maybe it's at 150, but there's a good possibility this could get cut in half. I mean, everything that we've looked at looks like it could get cut in half, and I wouldn't even think twice about it. Netflix, absolutely terrible. Second massive gap down. It didn't even try to fill the gap this time. I mean, is this thing a buying opportunity under $200? I mean, I don't know. This candle right here looks like something has changed. Like, this doesn't look like the type of thing where it's like, oh, I'm going to buy the dip on this one. It's just a little pullback. I mean, this is the biggest, reddest candle since back here, and it happened right at the 821 cross. So again, the 821 crossed the downside in 2011. So again, we have 11 years of parabolic bull run, and now we crossed the 821 back to the downside here. So we're doing the same thing we did right at the massive crash. So eventually, yes, I expect us to bounce to 200, come back up, retest the 821. Maybe we get back up to like $300. A nice 50% move in Netflix. Before it goes lower, maybe this is the bottom already. It looks like it's only just getting started. It literally looks like it's just getting started. We blew through the 236. I would be looking for a wick down to the 382. Wait for that to get bought up and then enter into a potential scalp back to like 260 or 300. But Netflix looks terrible. And realistically, I mean, this thing, it literally closed at the lows. Google is next. Daily Google looks horrible. We lost that key support, and it is just melting down below 200 exponential and simple. Switched into a bear market. Are we seeing a trend right here? I'm seeing a trend. Everything's in a bear market. That's weird. Monthly has closed below the 21. Looks absolutely horrendous. Same thing. I mean, we're breaking down from key levels. We basically went on a massive bull run since 2009. Went absolutely parabolic at the end here, and this is looking like distribution blow off top. And again, look how much further down the 200 exponential and simple is here. So, I mean, I'm not saying Google is just going to crash down to $800, but again, we know on a long enough time frame, these things come back down to their 200 exponential and simple moving averages. And, we're the furthest we've ever been away from it. Hard sell, leaving the bearish control zone, all red histograms. I mean, this is 6-7 months of distribution clearly been taking place. You've had a chance to exit before this massive sell-off candle. So no surprises here. We've been blowing the horn, screaming from the mountaintops. There's nothing more I could possibly do to try to, awake people to what was about to happen. Now it's already happened, so we can look back at it in hindsight, and we can all smile and say, ha, we told you so. Amazon, again, breaking down from key levels, complete capitulation, complete meltdown. Obviously, the company's not going to go bankrupt, but doesn't look great. You guys know my target on Amazon. Initial target was basically 25.21. Secondary target was 2,300, but the real target is continuation to the downside of potentially 0.5 or eventually that 2,000 level. So, I was calling for $2,000 Amazon when we were up here at 3,300. Now we're at 2,500. We're closer to my target than we are to the price when I was calling for it. So I'd say there's a better chance now that we get there than there has been ever before. So we lost key levels. Again, we have a gap all the way up to 27.24. So do we get a little 10% bounce and then go lower? It's possible, but these markets sure don't look healthy to me right now. So I wouldn't be holding my breath on these bounces. You might just be taking the bags from somebody smarter than you. I mean, this is horrible. Looks like we're about to get the 821 cross to the downside for the first time since 2008. So this was our 2008 crash right here. This is what happened to Amazon, 2008 crash. Okay, wasn't that bad, right? Sure, I mean, on this chart, it doesn't look that bad. But that's the 821 cross to the downside. And, from peak to trough, that's 65%. So sure, it doesn't look bad as long as you can hold 65% drawdown in Amazon and, you know, not get scared or not think twice about it. So what would that look like now if that played out? What would a 65% drawdown look like? Well, it would probably just be, oh, look, a retest of a 200 exponential. So $1,200 Amazon. I don't think we go to 1,200. I'm not sure we're going to 2,000. But, I mean, there's definitely a possibility. It's definitely worth paying attention to. The big crash was 2000 back here, you know, and at that point in time, Amazon went from, you know, 112 down to a handful of dollars. This is $5. So, you know, it doesn't sound that crazy if it did it before and now it's an amazing company, you know, that we would actually just pull back to 200 exponential and simple. So we see all red histograms for basically a year. We have flipped the slope line over red. We're fast approaching zero. The 8 and 21 are about to cross the downside. The stochastics angrily angled to the downside, accelerating towards the neutral zone. You know, I don't see any sign of this stopping anytime soon. Now, does it have a bounce? Probably. I mean, I don't know. I know a lot of people are like, oh, I don't want to miss the bottom this time. I don't want to miss the bottom this time. You know, that reminds me of like the Pavlov's dog experiment. You know, the market, and we were talking about this when the markets were just going back up. I was talking about how the whales, the market makers, you know, the 0.1% were training the market to buy the dips. They were training them over and over again. Every time they ring that bell and there's a dip, if you just buy the dip, you make money, you make money, you make money, you make money. And then everybody gets trained to just buy the dips. And then what do? They keep dipping it, and then they dip it even lower. And then it bounces back up, and everybody buys the dips on the way back up, and then they dip it even lower. And that's how distribution takes place. The intelligent investors, the smart investors, the institutional money, the whales, the market makers, the 0.1%, whatever you want to call it, they literally train all the plebs to just unload their bags on them. They say, here, hold this, I'll be right back. And then eventually it goes lower, and then they find some more people and go, here, hold this, I'll be right back. And all they're doing is just dumping bags. I mean, this market looks absolutely horrendous right now. I mean, it looks so bad. And the same people that are saying, oh, buy the dip, you don't want to miss the lows this time, it's going to bounce, it's going to be a V recovery, the Fed can't do it, the government will go bankrupt, all those people are morons. Because those same people are saying the dollar is weak and this is manipulated, but then when their stocks are going down, you know, or up or whatever, it's not manipulated. Then it's all natural, it's all normal. So we have gold next, XAU. So we closed below key levels. Obviously, this was right in line with what we've been expecting. So we're at key support. We flip over to the monthly. You know, we closed back down at the 8. Doesn't look terrible. Looks like a pretty clear double top rejection, at least temporarily. We'll see what happens. Hard buy signal. We have to see if this rolls over. So this is what I was saying. If we reapproach the slope line while it's still blue and we see a rejection, it rolls over. That typically is a pretty aggressive rejection in price action. So you have to be real careful that that's not what happens on the monthly. It looks like that's potentially what's going to happen, but we don't want to get overly excited or overly bearish or anything. We still have potential for like cup and handle scenario playing out. You know, we have a pretty clear like descending channel. We don't have it drawn exactly how it needs to be. It's kind of just sloppily thrown on there for now, but we see some interaction with the heart lines. So we're looking for some kind of target around like the 1800 range. I'm not like overly bearish in gold by any means. But it has to have a certain particular environment to perform well. And we're not seeing that so far. So XAG, silver, absolutely terrible. So we have hit the bottom of the channel. So we did it. We made it to the bottom, guys. Hooray. Made it to the bottom. Oh, we were right about it once again. So silver, completely lost 200 exponential and simple. Looks like total trash. Back down at the bottom of the channel. Retesting it for the umpteenth time. So we had a bunch of attempts to break out here. They failed. We came back up once and got rejected, and now we have just been hanging out at the bottom of the channel. We tried to reclaim these levels and failed. Silver looks absolutely terrible. I cannot believe silver is back at $22 again. It will soon be at like 19, maybe 17. Looks absolutely horrendous. Looks like it's ready to just completely let go of this horizontal support, this channel. And when it does, it looks like it's probably going to, like I said, somewhere between 17 and 19. Silver, complete failure. Once again, the Wall Street bets guys, I mean, I don't even know if they're still around. The Wall Street silver guys, all the silver, you know, apes and the monkeys and the silverbacks. And I mean, they probably have lost all their money at this point in time. Went to the pawn shop, sold their silver, and just gave up. They're probably back to investing in, I don't even know what they buy. Some other collector's trash that will never go up. No offense to silver holders. I actually, you know, like silver. I think it's great. But you know, again, I picked up my silver at much, much lower prices, not over here, you know, buying into a weak trend. XAU, XAG, gold silver ratio. So we blew through the 200 simple. We closed on top of it. This is our weekly chart. This is what we've been anticipating. Still looking for a 90 on the gold silver ratio chart. So still way up here, 90, 91, somewhere around there. If we switch over to the monthly, we have crossed 821 back to the upside on the monthly. The previous times when that has taken place, you know, this was when we crossed it to the upside. This was 2012, and you know, it crossed to the downside again in 2016. So that was 4 years of silver losing value compared to gold. Here it crossed back to the upside in 2017. Here it crossed back to the downside in 2020. So another 3 years of silver losing value compared to gold. And then obviously we see here we have crossed. We're 1 month into the cross, maybe 2, depending how you look at it. And so we know on average we probably have another, 3 or 4 years of silver losing value compared to gold. When does silver lose value compared to gold? Well, typically it happens at when gold is losing value and silver is losing value faster. Very rarely does gold gain value compared to silver while they're both going up. So we'll have to see what happens. If gold just goes absolutely parabolic and silver just kind of goes parabolic, it's possible. The most likely scenario is that gold and silver are both going down and silver is going down much, much faster. And again, anyone that denies, you know, what's taking place right here, you know, we're basically, this is the beginning of a bull run on the weekly in gold compared to silver. So anybody that's buying silver right now, maybe consider buying gold instead. Obviously not financial advice. XPD, palladium, you know, closing right there at the neutral levels. We looked at this one, and honestly, I don't have a bias one way or the other. I mean, we're at neutral zone. If you're like looking at the 200 exponential and simple and you're thinking, okay, over the last 200 time periods, here we're on the daily. So over the last 200 days, whether we use the daily exponential or whether we use the daily simple 200 moving average, we know for a fact that right now, palladium is trading at a fair value, because that's what these represent. They represent two different ways to calculate the fair value over the last 200 periods. So we're right at fair value. So again, we're buying neutral. If you're taking a bet on palladium right now, you're basically it's a coin toss as far as I'm concerned. A coin toss as far as I'm concerned. You know, we're right at the neutral level. So, you know, if you want to take a coin toss play on a shiny metal, by all means. But no advantage as far as I'm concerned. So next we have platinum. Looks absolutely terrible, closing at the lows. Platinum looks like it is ready to let go of key support levels. Very clear rejection off 200 exponential and simple, and then we took out the low right here. That was the last thing we wanted to see. So now we have a high, then we have a low, then we have a lower high, and now we're putting in lower lows. I do expect continuation, probably $850. I mean, who knows? This thing could easily melt down and put in new lows. So we got to really just watch this. I mean, it's like nobody's using platinum for anything anymore. It's just useless. Obviously, that's not the case, but it sure seems like it by the chart. ACB, pot stocks, closing at the lows. Absolutely horrendous. Very, very weak. I mean, this has, you know, we're back at 2015 levels. So we have literally wiped out all the gains ever in Aurora Cannabis. There are 3 people that ever bought, and by 3 people, I mean 3 months, that you could have ever bought that you would not be a complete loser right now. So absolutely horrendous. Looks completely terrible. New lows on the monthly. Doesn't look like it wants to stop anytime soon. So pot stocks looking absolutely terrible. And again, I keep saying, I do expect these to continue putting in new lows until we get a sign that they don't. So that's why every time I'm taking scalp plays on these things, all I'm doing is taking my profits off the table, taking back my initial investment, and then leaving some of the position open to accumulate and slowly build a position. And then one of these times when we buy the dip for one of these scalp plays, you know, we'll take some profits off the table again, and then we'll start to turn around the trend, and then we can really start adding to that position and buying into strength, and that's when we'll see massive gains. But we don't want to just go all in right now at lows and assume that that's the lowest low. Again, we're just trying to pick the bottom. Now, obviously, a lot of these are trading well below book value, or, you know, arguably like what the market value should be. but it doesn't mean they have to stop here. I mean, these are way out of favor. Monthly Tilray chart looks absolutely terrible at the lows, at the all-time lows. I mean, we have a wick down here lower, but I mean, this thing is at $5. I remember when it was at $20, I was literally saying, I mean, obviously I sold out in like the $50 range or $48 range back here. But I remember saying at $20, I was like, I wouldn't be surprised if this gets cut in half and we go to 10. And then at 10, I remember saying, I wouldn't be surprised if this gets cut in half and we revisit the lows. And now here we are at $5, under $5. I mean, look at that. Don't get me wrong. I think some of these are going to be the buying opportunity of the decade, but damn. CCJ pulled back down to support. I do fully expect these uranium stocks to continue to the downside for a little bit and kind of retest some of these key levels. Looks very toppy. We hit our target almost to the T. I mean, I would have rather see it get up here to 33.80, but that's just because I'm real picky. So does it look like it's done? Probably. It's still pretty strong, though. I wouldn't get too excited on this thing, just dropping in shorts or anything. Uranium still looks pretty strong overall. Could be topping here. Could easily see continuation. But definitely going to be a buying opportunity at key levels. When we see any kind of like bullish divergence developing, or we see it consolidating at a key support level, looking like it wants to bounce, I'm probably going to just reload my positions and then take profits at the highs again, and then wait and see what happens. You know, if we keep breaking out and, you know, buy into strength. URA, I would rather dollar cost average up into strength than dollar cost average down into weakness, if that makes sense. So URA at the 200 exponential and simple, again, looking pretty weak. You know, getting pretty heavily sold off. Monthly chart, took out the last like 6 months of price action. Again, at some key support, I think we get this at 20 bucks. I mean, this has so much potential, but again, we don't want to get too excited on it right now. But it definitely looks like it's flipping around for a short-term pullback. UEC, same thing, selling off pretty heavy, seeing some weakness at the end of the day there, at the end of the week. And then the monthly, you know, obviously it looks like we've hit our 5, our target, our high. We don't see any kind of divergence or anything. Still looks pretty strong. We did get a hard sell signal in the Stokes triangle to the downside. So maybe after this like shooting star rejection, you know, the last one we got a pretty heavy push down afterwards to the 21. This one's slightly more bearish because it is red. And again, big long wick rejection to the upside. So we probably do come back down to like $3, and then we can see from there where UEC wants to go next. And then next we have UROY. Again, losing key levels. That was a key support level there in yellow. We're losing 200 exponential and simple on the daily. The monthly didn't put in a new low, but it's starting to look like a high, a low, a lower high, and then lower low. So this is obviously looking worse than uranium stocks because they put in a new high right here. So I really do think we're going to get this at like 250. So, and again, some of these probably going to be the best trades of the decade. So definitely paying attention to uranium and pot stocks, always watching them, waiting for the opportunity for not only just a quick scalp play, but for that legit position. All right, and last but not least, let's look at some cryptos. Yo, what's going on, Angel? Good to see you. Hello, hello. Can you give your opinion on XDC to USD crypto? Yeah, I think you had me look at that one before, didn't you? I don't remember what it was. It's impossible to keep track of all these crypto tickers. Maybe on Finex. All right, so Bitcoin, futures chart. So we closed the futures chart here at the lows. Didn't put in a new low, which is at least a kind of good thing. Looks pretty weak overall. We did see some of those rejections we talked about. The monthly closed exactly at our target at the 21. So we're at the 21. So maybe now we push back up to 4,200 again. Sorry, 42,000 again. Or do we get that rejection and further downside? I don't know. All red histograms, 6 months now of red histograms, hard sell signal, weekly bearish divergence, monthly bearish divergence. Bitcoin looking pretty tired at these levels and looking like it wants to let go. I did do a deep dive in Bitcoin last week. If you didn't check that out, go check it out. Obviously has some crazy like $3 million Bitcoin targets. Also has some crazy like $1,200 Bitcoin targets. And there's a possibility that it hits both of them. So BTC USD on Bitstamp. Below the 200 exponential and simple, still looking very weak. Angle to the downside, closing at the lows. Definitely seeing some serious weakness in crypto. Very correlated to the NASDAQ right now too. So no diversification, no safety play, no store of value. All of the things that we were told that crypto was have all failed. They've all failed. Doesn't mean crypto's dead by any means. I definitely think it's the future. But all the arguments, all the narratives, all the sales pitches that we've heard from all the Michael Saylors and all these other peoples of the world have all been wrong. They've been proven factually wrong in less than 2 years. So that being said, I feel bad for anybody that levered up their house, their car, their family business or whatever, and listened to Michael the Failure Saylor, which is what he'll be officially called once Bitcoin drops below his, average price. But that being said, on the monthly, close below the 21 or at the 21, new low close on crypto since we put in our peak. Again, bearish divergence taking place. Hard sell signal. Stochs are angled and accelerating to the downside. This looks very much like what happened right before the big dump. So are we ready to lose 50% of crypto right now? Are we ready for crypto to be at $19,000? I'm ready. I think that's the most probable scenario. I don't see any signs that anything is going to change. There's no bullish catalyst for crypto. There's nothing good going on in the space. There's 20,000 cryptos, and most of them we've never even heard of. So to tell you the truth, is now a good time to be in crypto? No, I don't think so. I think it's a horrible time to be in crypto. Everything's bearish. There's like 2 good charts in all of crypto. And the correlation of crypto to each other and to the NASDAQ is extremely high. So doesn't bode well for the 2 and 1, it's like 1 in 1,000 at this point. No, 1 in 10,000 cryptos looks good. So ETH, very weak, below 200 exponential and simple. We do have a sell buy sell signal. It's at the bottom of the range though. So it's much less reliable. If it was a buy sell buy signal here, I would say we have divergence buy about to take place. That's not what we're seeing. We're seeing sell buy sell at the bottom of the range. So I don't want to just write this off, but now is not the time to be taking a sell signal as far as I'm concerned. I mean, we're basically in the middle of the range. It closed at the lows, slightly more bullish than Bitcoin because it's at least off the 21. 6 months of red histograms, hard sell, accelerating to the downside. I mean, it looks the same way. It looks ready to just let go. Crypto is probably the most risky place you could have your money right now. Because it literally looks like we are a snap of a finger away from a 50% sell-off. Bitcoin dominance on the weekly. So at the end of the week, last week, we reclaimed the 8 and 21. We're back on top of it. So here we are. The weekly is back above. So maybe we see the green cross back up and we finally hit my target. Obviously, my target forever has been 45, 44 and a half, whatever. We're on our way up there. So we'll see what happens. Hard sell signal coming in. So whenever we consolidate for a long period of time like this, these sells and buys become extremely unreliable. So oftentimes, the sell will come at the area where you should buy. So here's the low. There we got the sell. Here's the buy. That's, basically the high. Here's the sell. That's basically the low. Here's the buy. That's basically the high. Here's the sell. Basically the low. Obviously we'll see. But when we consolidate sideways like this stuff all becomes jumbled and it's much less reliable. So, but typically when we see this pattern happen with the moving averages and they keep tightening up, and then we cross them and then it fails, and then we cross them and it fails, typically that means we're about to shoot up to the upside. So what does this mean? Bitcoin goes parabolic and altcoins can't keep up, or Bitcoin drops 50% and altcoins drop 99.9%. Either one of those viable scenario. I would say alt's probably closer to like 85%, but so weekly chart on Bitcoin dominance looks exactly like the Bitcoin chart. Failed to hold the 821 cross to the upside. Looks terrible. Closed at the lows basically on the daily, on the weekly, and now we see the monthly chart just hanging on to the 21. Bunch of red histograms, hard sell signal. Crypto, again, just very, very weak right now. Somatic putting in new lows, horrendous close. Absolutely terrible weekly, monthly close. I mean, this monthly close below our previous support levels right here. We talked about these levels and how important it was to hold, and now we broke down below them, and we're coming back up to them. So obviously, this is the beginning of the month. Anything could happen, but assuming we get rejected at these levels, we discussed this, there's half a candle of support back down to 82 cents. And then after that, there's one candle of support to 35 cents. So if this thing decides to take a dive, I mean, it's a real dive. And this is just new lows We're not seeing any signs of bullish divergence or anything taking place. Clearly in a bear trend. There's just nothing good in the crypto space right now. BNB, below 200 exponential and simple, bear market, just continuing just to melt down. This one's holding up better than most, but we have a clear support at 331. Once we lose that, if we lose that, we're looking at fibs. So 221 after that. I mean, this thing looks like it's just ready to have $70 to $100 just cut off multiple times in a row. BNB not looking strong right now. AVAX below 200 exponential. 200 simple is flat now. It looks like it's about to roll over. This thing's officially about to confirm into a bear market. Avalanche looking absolutely terrible. Completely has wiped out. I mean, this is all the price action that took place for the last, year and a half, whatever. Completely wiped out. And we're below that. So anyone that ever bought into this, with the exception of, this is obviously the Coinbase chart. So this is when it got listed on Coinbase. But anybody that bought into this thing, with the exception of like this 10-day period right here on Coinbase, is upside down. So every time we get a push to the upside, people are going to be selling into it because they just want to get out of their position, neutral or at less of a loss. So there's, we've done this a million times. I haven't done it for a while. So just to illustrate, my point basically right here, if we look at where we're at right now and we start a square right there, and then we just go back and figure out all the people that ever bought into this thing that are at a loss right now. So all this price action is losers. This is where all the losers live. And then this is the winners. Here's the people that bought Avalanche and are not upside down, that have not lost money. So just for, a little perspective on these things, because I know people still love this stuff and they're like, oh no, it's just cooling off before the next parabolic run. Here's your winners. Here's your losers. So 99% of the people who bought into Avalanche on Coinbase or since Coinbase are losers. And then there's this itty bitty little block right here of the winners. And how much are they winning by? Like $5. So good job. Congratulations. Avalanche is total trash. As expected, as predicted, as discussed. Flavor of the month, garbage. Solana. So it managed to not take out the lows. That is good compared to many of the other cryptos that did take out the lows. Looking at the monthly, it does look pretty weak. We did have a new monthly close on this, unfortunately. And again, we have one candle that took us from $36 to $100. So there's one candle, 1 month of price action that is stopping this thing from going to $36. And, what's the volume look like? Oh, it's pretty decent. Wasn't amazing, though, for the size of the candle. So is it possible that a month from now, Solana is sitting back at $36, down another 60% from current price? Yeah, it seems actually like where it's going. It seems very probable. That's an 86% drop from the all-time highs on Solana. 86%. So do I expect Solana to be down 86% at the end of this next month or in the next couple months? I do. I think it's total trash. Based on the chart, based on the actual chart, based on things that are measurable and clear to us, we know that Solana looks like trash. It's probably a trash project and probably has failed and was just a bunch of empty promises or a nice marketing campaign, however you want to argue it. Does one day in the future it become huge and awesome and successful and the price goes way up? Sure. And I'll buy some way before that happens. But right now, it looks like total garbage trash. Complete meltdown. Bear market below 200 exponential and simple. Garbage. Next we have XMR, Monero. So Monero has pulled back all the way now to 200 exponential and simple, trying to hold support. 8 and 21 have crossed the downside. Still looks better than most because it's on top of the 200 exponential and simple, but looking very weak now. It's looking like a pretty clear failed breakout. We wanted to hold that level. We need to hold the 200 exponential and simple. The last level to the downside where I could still be bullish on this is 182. If we go below 182 on like a daily or weekly close, it's going to look really bad. And then if we just switch over to the monthly, it's barely hanging on to the 821 cross on the monthly. Again, the thing about this is it looks better on short time frames, but this looks much worse on the monthly. I mean, this looks much worse. It looks like a rejection on the monthly trying to reclaim the 8 and 21. So if we close down below that 200 mark on Monero, we're probably going to get the 821 cross and confirm into the bear market. And the last time that happened, was the 2018 bear market. So it looks pretty bad. it looks really bad on the monthly. This is probably one of the worst crypto monthly charts, with the exception of something like XRP or like Dash. I mean, like the total garbage trash of like existence. So that being said, XDC by request on the daily, it looks pretty bad. Did get the reversion to the mean play, so obviously that was nice. I feel like we charted this and talked about this a couple weeks ago. So we did get the reversion of the mean play to the 200 exponential. So now it looks like basically, you sell into that, obviously, and then wait for further downside. Close well off the, oh, we did. Okay, there's a bunch of drawing tools on here. I just didn't see them. Oh, yeah, the 236 was right there. All right, so apparently I'm going blind. But yeah, we got the push back up here. Fairly aggressive. Crossed 821 back to the upside. Pretty aggressive knife stab. Still looks okay for being under the 200 exponential and simple. Clearly in a bear market, I think the majority of the move is done. I wouldn't be surprised to see it go up to like 75 cents. So maybe another like 20% or so. I wouldn't be surprised, but it really looks like it wants to go down. Weekly chart is trying to curve back up here. It's trying to call this a bottom. I don't know if that's going to happen, but it's trying to respect it as a bottom. I mean, it is the 236/382 of the fifth wave and of the macro. I left off this massive wick, but I feel like it looked better that way. Yeah, because that was the touch of the 236. Oh man, I don't know. It looks pretty freaking good this way too, because the 1 is at the 618 and then the 3 is basically at the 382. So this could go either way. The way that fib is drawn, either from the bottom wick or from here. It is on a monthly, so we'll go from the bottom of the wick, but it's all red histograms, hard sell signal below the 8. It was below 21 also. Looks like they're pretty close to crossing the downside. This looks like it's going much lower, man. It really does. I would really be looking at the 0.5 target to downside, 2.7 cents and 1.7 cents. That's what I would be paying attention to. Now, before it goes down, does it go to 77.6 cents? Maybe. But I think you're taking a lot of risk for very little reward. And as far as I'm concerned, I mean, we already got the move we discussed. I mean, this was the move we talked about, was the retest of 200 exponential, 200 simple, and the 236. So I don't know why I didn't put a box in here. I guess I got carried away, but I would basically be looking to unload my position, if I didn't already, into this area. Now, obviously, it's hindsight drawing this on here now because we see it basically touch that exact level. But that's, I draw the boxes the same way every time. So that's what I would be paying attention to. Now, does it have to be done? Could it still push up here? It really looks like it wants to continue pushing up here. It really does. But again, the risk-reward ratio at this point in time, got to be real careful because we're talking about potential of, best case scenario, we're talking about 20% upside. Neutral scenario, we're talking about just revisiting the lows, which is probably 30% downside. So it's less than a 1-to-1 risk-reward ratio. And then if we really get the breakdown and it goes down to the 0.5, we're talking about 20% upside versus 55% downside. So we're talking about like 2.25 risk-reward ratio inverse, like twice, over 2 times the risk for the reward that we're potentially getting. Again, this looks very bad, but it does look like it probably wants to have some continuation. These things typically like to come back up on the reversion of the mean play and tag the 200 exponential, the 200 simple, and the 236 fib. That's like the most common targets. Now, something like the NASDAQ didn't quite make it to the 200 simple, didn't quite make it to some key levels and reversed. Other things like the S&P overshot, and go up even higher and then roll over and get rejected. I don't know what this is. I don't know if it's good. I don't know if there's a big cult following behind it. It looks like it still wants to creep up here a little higher, but I wouldn't get greedy on this one. I would not hesitate to be taking profits on something like this. But yeah, that's it. Made it to the end. Ripped through it again, didn't we? Absolutely killed it. Oh, it feels like it went pretty quick. Hour and 24. Okay, so it wasn't crazy short, but yeah, I think we nailed it, guys. So big week coming up. Obviously seeing a bunch of new daily, weekly, and monthly closes. Not good. We are seeing a bunch of negative catalysts in the markets. And, again, keep in mind, this whole last few weeks, people have been buying and accumulating and buying the dip and talking about how bullish they were and all this stuff. And then all of a sudden we start putting in new lows. Those buyers turn into sellers. And then we still have the old sellers. So now we have the old sellers plus the old buyers become sellers. So now we have potential to accelerate to the downside even faster. So we need to be really, really careful now in these markets. I mean, we're basically at a breaking point in many of these markets. And to tell you the truth, I mean, it looks like they're going to break. It looks like the Fed needs an excuse to pull back off of their, accommodation. And they may not even do it then. So we'll see what happens. But, I expect more pain into the future. Now, again, it does not mean there's not going to be some opportunities on a couple of these for a scalp play. But in my opinion, the number one most important thing to be doing now with any trades we're taking is, we want to be that 2-pump chump. Get in, get off, get out. Bam. You know what I mean? Get that nut and get the fuck out of there. Because we don't want to be holding these positions like the cannabis stocks. It sounded crazy at the time, but with things like Tilray and some of these other cannabis stocks, they shot up 50% in a couple days. And I told you guys, I'm closing my positions. I'm taking profits. I'm ending it. I'll leave some of my profits in accumulation or put them aside to repurchase later on. But I'm not just holding these things while they just go back down and put in new lows. And they literally gave back all of the pump. And many of the tech sector stocks did the same thing. ARK was up something like 40%, and now it's at new lows again. I mean, we need to be getting in, getting off, getting out. Definitely scalp trades right now. Taking profits at key levels and making sure that we measure out our risk-reward ratio. So that being said, remember, this is not financial advice. I'm not your financial advisor. These markets are extremely volatile. Please do your own research and trade responsibly. Make sure to like, subscribe, all that good stuff. Make sure your dog watches along with you. Probably, like I said, not your kids, unless they're grown and living at home, which is probably more than 50% of kids now, so wouldn't surprise me. But that being said, going to wrap it up there. It is 9:30 p.m. Eastern Standard Time on May 1st, 2022. So let's have a good May. Keep in mind also the old adage, sell in May and go away. So we're probably going to see volume kind of cooling off on a lot of these stonkeroonies. Probably going to see a lot of people just taking those profits, kind of stepping aside and waiting for the market to play out. We'll see how the economy goes. We obviously had a negative print on the GDP for the first quarter, so we are literally 50% of the way to a recession. Next week we will next stream we'll take a deep dive and look back at the yield curve inversion and see what's taking place as it has uninverted but continued to creep to the upside. But it looks like we're about to get our second confirmation inversion sometime in the next week or so. But yeah, going to go ahead and wrap it up there. Make sure you tune in for our Wednesday stream, 8 p.m. Eastern Standard Time. And then obviously our Sunday streams as well. And then, of course, we have the Friday stream at 11 a.m. Eastern Standard Time. But that is it for today. I am Crypto Trend Trader, and I am out of here. Peace.